General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Today's July 2nd. It was NFP today. As expansion, I engaged. Confidence levels, medium. Price to living signature was seen. Anchor point could be Tuesday. I would drop down, but I still think it's not really directional. We can get higher prices still. Expansion is playing out to the downside. 10 minutes hit today. No, we're still in the inside week. So we haven't took previous week's higher or low. Take a look at NASDAQ. Nice, beautiful. Didn't get the swing low. Got the 88%, which is like the most extreme retracement level. Buys from the wick zone. Closing back through Asia was a sign for lower prices, especially after we closed through here. Different little continuation plays. It was the day before the holiday. That was a nice sneaky way to put this day in the calendar. So NASDAQ, we do got these relative equal lows. We mad close to lots of wicks, 1, 2, 3 weeks. Lots of liquidity at previous week low, multiple lows and wicks in that area. Selling from the inverted level would be good enough for me to take a trade. So if we push up here to sell to there, it's logical retracement expansion. The daily. There we go. Inverted that fair value gap, we can retrace back up. Still in previous week's range. It's not really a directional week. Close that daily fair value gap. That would be a nice level to sell from. I have no bias. We haven't expanded out of previous week's range. That's a sign, especially since we had NFP and we didn't take no strong low. Like NFP was today. We didn't go crazy. I mean, subjectively, you could say today was a big bearish day, but that's the 1 minute chart. 15 minutes, CSPX, we didn't even get close. Respected this fair value gap. It's like sector rotation vibes. People getting out of tech and they getting into something that captures a broader view. Look how strong SPX is. We nowhere near Monday low. Look at the H1. Perfect respect here. And we just kind of been, this is the new week opening gap from 2 weeks ago. We've been here a long time. Whole new week opening gap, still holding. We've been in this area forever, meaning the market feels like this is a fair value price. That's where it wants to be. On a daily, super bullish, like the complete opposite of Nasdaq. It was a big down close day. We retraced and came back up, and it looks like we want to go re-get this high maybe. Yeah, looks better than bullish. We respected the fair value gap. True. Those stock chart. We got a down close day on the stock chart. Swear both sides of this candle. I'll be watching this as a mile marker. This candle. We got volume imbalances that need to be rebalanced, but we also got this volume imbalance here where we sold from. I'm watching Tuesday EQ since we both sides. True. And then here go QQQ. Super, but we didn't take this low. Kind of putting bodies in this volume imbalance. We can really just rebalance this and not go nowhere. It's been gappy for a while. Like this gap is the gap I feel we hit on spot 2 weeks ago, right here. It's crazy. Lots of gaps in this area we in. And Nvidia down day, but still not closing below the 200. I think they buying up Nvidia. The engagement. But this one's a scratch, and then partial after this buy. I took the buys at the market open. I was looking for previous week's high. Did I follow my plan? Yes. If not, what caused it? I followed my plan, so that doesn't apply. What did I do well? Execution. What will I do different next time? Nothing. Did the framework play out? Yep. What did I learn about pattern narrative myself? Even when price goes the other way, my process still gets paid. Good process. What will I launch for tomorrow? Holiday, the market closes early. All right. So the chart work for the day. Y'all have a good day. Peace.